Kevin with meetkevin.com coming to you with a quick tip. People always wonder, how do you amass real estate when you have to collect 20 to 25% down every time you want to go buy a property? Most people think you need 20% down to buy a house. You go to buy an investment property, you need 25% down. What's a pro tip? Buy property with minimum down and then move after a year. And keep the first property. So now you're only saving 3 to 5% every year. This doesn't work well for people with families or people obviously settled into place because you're moving all the time. However, if you're a young family, you're capable of moving every 1, 2, 3 years, it makes a lot of sense to put 5% down and take advantage of low interest rates and move every 2 to 3 years. Now keep in mind, all that means is you have to save 5%. So if you go to buy a $500,000 house, you've got to put aside $25,000 before you can buy the next one. It's a lot of saving to do, so that's why it may take 2 or 3 years, but theoretically, you could do it as quickly as every year. You're supposed to live in an owner-occupied property for at least 1 year before you move out of it. Now, the other caveat is you actually have to qualify for all of these properties. However, once you have your first rental property, you get to start declaring. The benefit is, once you have your first rental property in the bag, you get to start declaring that income. It really helps you qualify, especially if you have a cash flowing property. Well, that's where the other issue comes in. Sometimes if you continue to put minimum down payments down, the cash flow might not be that great. Have a long-term strategy, and as rents go up, it'll be a lot more possible. Keep this in mind, you don't have to be a first-time home buyer to get a 5% down loan. Anybody who's going to own or occupy a property can put 5% down. There are loan limits in certain areas. Talk to your lender, 5% down is a possibility for most people. Now, generally it's not possible on high-end real estate because the minimum down payment requirements usually go up to 10% if you're going to live there. That's oftentimes up to $1.5 million in our area. You can get by with 10% down. So if you haven't bought a house yet and you're thinking of buying a house, don't think you need 20%. The very first step to acquiring real estate wealth is getting into your first property. Save that 5%, get in. If you don't have your first property yet, there are even programs you can take advantage of that will help you get your first property by covering some of your down payment costs. That's huge. Once you start amassing real estate, it also becomes easier to leverage against the properties you already own to buy future rental properties, and that's really where you can extrapolate your wealth. The key secret to all of this is don't sell your first property. You gotta keep it. So remember, don't wait to buy real estate. Buy real estate and then wait.